Hi everyone. Okay, so let's wait for another 2 to 3 minutes, yeah, to let the rest of the people to streaming in. Okay, thank you. Okay, hi everyone. Can everyone all hear me? Okay, right. Okay. So my name is Roy here. Okay, I'm very happy to be here today, sharing together this this webinar with Marcus. Okay, very happy to have him from SocGen.
Hi everyone. Hey,
Okay,
thanks Roy.
hi. Yeah, so today we are very happy because we are working with SocGen today to present this trilogy of webinar that we're going to talk about actually on how to look into optimal entry and exit point, where I'll be sharing on it, risk management as well as trading DLC. Okay, where Marcus will be talking on the details of the DLC part. So basically, we are presenting all this part is because DLC is actually a good instrument, leverage instrument where you can actually trade in both directions, whether it's go long or go short, to navigate the market volatility, which is very important, especially the current volatile market. Okay, yeah. So I just hope to me and Marcus just hope to seek you guys permission, that for the next 1 hour we can have your attention, because we're going to share with you guys about a lot of things. But today we'll be going through more on the fundamentals, the basic part. But there'll be another two to three or I think about two, right, Marcus? Another two webinars.
Yeah, two.
Yeah, to where they will actually delve into more on the details on trading the DLC. Yeah, so do look out for the two other webinars also. Okay, yeah. So okay, let me proceed now. The other thing I would like to share with you guys would be actually this promotion that we are currently having with Poem is currently having, where let's say for those of you that are new to DLC or who have not traded DLC for the last 1 year, okay, please just take a few seconds to scan this QR code over here. Okay, this QR code over here. And then because if you do some DLC trades, you'll be able to get the $200 cash credit, and the details are actually inside this QR code. Okay, so just take maybe about 5 seconds to scan it to find out more about it. Okay, don't miss the chance. Right. Okay. All right. Okay, so let's go to the next slide. Okay, so first of all, let's talk about the disclaimer. Okay. Let's spend about just maybe 15 seconds maybe to read through this disclaimer first for everyone. All right. Okay. So so basically the key is this is for education, right? And if you want to do any investment product, please consult your financial advisor first, right? Because this is for education today, right? So please don't take our advise to just go and buy and sell. You know what I mean? Yeah. So please read through this disclaimer. All right, just go through another, maybe give another 5 seconds. Okay. Can. All right. So a bit more about myself. Okay. The person on the left actually is me. All right. Give me a minute. Okay. The person on the left is actually me. My name is Roy here. Okay, I'm actually a principal investment specialist with Phillip Securities. Okay, the person on the right is actually Kelvin, my partner, and he will actually be the other speaker who will be presenting the second part of the trilogy or webinar with Societe next month. Okay, so to look up for it. Okay, previously I was actually in the aviation industry doing the maintenance, repair, and overhaul as a supply chain leader for 5 years with the company. Okay, so previously I was not in finance industry. Okay, so I started investing and trading since 2008. Ironically, it is during the Lehman Brothers, which collapsed, that piqued my interest into investing and trading, because it's something I always interested but never really able to find out more. Okay, and I'll just share you some tribal things. My birthday actually shared the same date as Lehman Brothers date of bankruptcy. Yeah. So you know, after that I found out more about things, start to learn about myself, or start attending some courses, reading some books. And then 3 years later, I actually joined Phillip Securities because of my passion and interest. That's where I actually met Kelvin, and then we decided to form a team. Okay. So together with Kelvin, we are actually known as Kelvin and Roy in the industry and company. Then we were actually awarded the most improved trading representative award in 2014, and then in 2016 to 2019, for 4 consecutive years, we also awarded the top trading representative award in Phillip Securities. Okay. Yeah. So what we're going to talk about tonight, right? So what we're going to talk about tonight is basically 2 simple ways to identify uptrend or downtrend stocks. Okay, and how to identify key levels for entry and exit on stocks. Okay, and how to do proper position sizing for risk management, which is very important. Okay, and 2 simple way to identify uptrend or downtrend stocks. So basically, what I'm going to share with you is the moving average as one. Okay, and then the other one would be on trend line. Sorry, I also forgot to add, for this webinar, if you have any questions, please use the Q&A section to post your question there. Yeah, because the chat function, I think for simplicity, we actually all shift to the Q&A. So please post your question in the Q&A side, so that later, you know, anything for Marcus or myself, we can answer them. Okay, yeah. So maybe some of you are already using moving average or trend line, but maybe some of you are new. Okay, so you know, if those who are new, it'll be good. Those who already know it, maybe you can just listen first. Maybe there are some details that we can, you know, exchange pointers with. Okay, yeah. Okay, so for moving average, right? 2 simple way to identify. First, we're going to talk about moving average. Okay, so what is moving average? For some people, you may not be familiar. Actually, simply say, right, is indicator that is derived by calculating the average 20 closing average closing price over a given period of time. So how is it being calculated? Is example, the 20-day moving average is derived by the sum of past 20-day closing price divided by 20. Okay, and the 200-day moving average is derived by the sum of past 200 days closing price divided by 200. As simple as that. But you don't need to calculate all this yourself, because all charting software would have those indicators. You just need to put in the number of days for the moving average, and you can have the moving average lines already. Okay. So basically, there are 3 main types of moving average. Okay. We want to emphasize also there's no best moving average out there. All right. There's no best moving average out there. Basically, is see which one you prefer to use. All right. So one is a simple moving average, right? Which is what I have explained earlier, using a above formula. And then you have the exponential moving average, which is something that I would tend to use more, because basically, to put it simply, it gives more weightage to the recent prices, right? Because that means let's say the sum of 20 days, right? It gives more weightage to the recent prices, so it tend to be more sensitive than a simple moving average. Okay, then you have the volume weighted moving average. This one is basically with volume in consideration, and is using the simple moving average. And then with each price is weighted with its volume in the formula. Yeah, but the more commonly used are the simple moving as well as exponential moving average. Yeah. So there are a lot of moving average, out there. You can have like 10, 20, 30, 40, 50. So what are the commonly used one? Okay. Again, there's no right or wrong, but we just share what is more commonly used by most people. So people who are, at least let's say you are new to it, you know what are the moving average to look out for. Okay, so you have basically the 10 and 20 days moving average, which is typically used to see the shorter shorter trend. Okay, the shorter trend. Let's say you have a strong trend, then you may use the 10 days rather than 20 days. Okay, then you have a 50 and 100 days, which is more on the medium trend. Okay, medium term trend. And then you have the 150 days or the 200 days. This is to see the longer term trend. Okay, yeah, so these are the main numbers to just take note. But some people may want to use the 40 instead of 50. That's also okay. I mean, there's no right or wrong, like we said. Okay, so basically, how do you use moving average to identify uptrend and downtrend? Okay, basically for uptrend, right, what you need to want to see is, let's say this is the lower moving average line. It should be on top of your higher moving average line. That means this is, let's say, for example, your 20 days line should be on top of the 50 days or the 100 days. Okay, MA is actually the moving average. Later I'll show in terms of a chart. It's easier to see. Okay, so the moving average, the line, preferably should be upward sloping. Okay, it should not be flat. Okay, preferably it should be upward sloping. Okay, and for uptrend, the price should preferably be above or at the moving average line. All right. So for downtrend, okay, it's actually the inverse, where your higher moving average line is on top of the lower one, and then your 50-day moving average, for example, should be above the 20-day moving average, and the moving average line are actually downward sloping. That means like going this way. Okay, not flat, but more like going this way, downward sloping. Later I'll demonstrate in the chart. Okay, so the prices are actually in the downtrend. The price should be below the moving average line. Okay, so we're going to share one example. Like you see this golden energy, right? You can see that the stock was actually flat, right? And then you have the different color code, which is the 10-day, 20-day, 50 days, 100 days, and 200 days. Okay, the different color codes, right? So you can see when the 10, right, is above the 20, the 10 above the 20, okay, and the 20 above the 50, 50 above 100, 100 above the 200, or 150 also can. Okay, this will be uptrend. So when it broke out, right, you see the moving average line tend to converge, and they in sync, where the lower moving average lines are on top and the higher moving average line are at the bottom. Okay, so this is how you see an uptrend. This is another uptrend here, and then this is the after they consolidate again, you have another movement where the moving average line again move in the direction that I mentioned earlier. Okay, so the steepness of the moving average line will signal how strong the trend is. For example, if you see this way, this portion, right, the moving average line are quite steep, right? Means you can see how fast the uptrend actually moved, how sharp the uptrend is. Okay, yeah. So the steeper the moving average line, the more stronger the uptrend. Okay, this is something to just share with you guys. Okay, so for downtrend stocks, okay, downtrend stocks like Comfort Delgro, like you see, it was actually on moving average more on towards the uptrend, right? This way it's moving uptrend. But when it came to the COVID part, right, you can see once it broke below the 200-day moving average. All right, the red box, you see the 200-day moving average was here, followed on top, followed by the 100-day, followed by the 50 days, and then the 20 days in green and the yellow. And you guys notice when the move was very sharp, how steep the slope of the moving averages line were compared to, let's say, this region, right? You see the moving average line is more gentle, right? Not so steep, not like curving downwards as much as the one in the red box, but the downward movement here is actually not as sharp as this part, right? So you can see, like, notice how steep the moving average, the EMA, because I'm using the exponential moving average, okay, were downward sloping, which coincide with the steep fall of the stocks. Okay. And then the other way, which is another way that I like to use, is to see using trend line. Because moving average, some people say is lagging, which is true, but is a more easier way, especially for beginner, to see, to confirm the trend. Okay, I'll explain more towards in a while. Like trend line is right. Basically, what is it like? It's basically just a line drawn over pivot highs or under pivot low to show the prevailing direction of the trend. I will demonstrate in a while on what I meant with charts. So you need at least 2 points to draw trend line. Take note of that. And it provides a visual representation of support and resistance in any time frame. That means it can be used for monthly chart, weekly chart, daily chart, even 15 minutes, 1 hour chart, also possible. Okay. So trend line can also be used to apply the high and the lows. Let's say you connect the low points first in the uptrend, then you parallel it. You can actually use it to create a channel to see the resistance and stuff like that. However, it's subjective because exact point used to create a trend line may vary among traders. Yeah, so it's like an art lah. But with practice, you should be able to draw trend line better and better, right? Just like anything we do with practice, we got to know things better and better, right? And then also you may need to readjust your trend line if the price trend move too much. Okay, later I will show what I meant by that. Okay, so like uptrend stock, right? For example, this is Joe Energy. You can see this uptrend, right? This is the uptrend stock. 2 points here, minimum, right? And you see each time it hits there, it will rebound. This is one uptrend, right? So first you join the low of the stock, right? Series of higher low. You see the low is actually higher and higher each time, and then you form a higher high also. Higher high, higher high, higher high. And then if you take note, there is this green trend line also. Why we need to readjust? Because we can see that the trend line has steepened. When it's steepened, it also means that the prevailing trend is more pronounced, more up move, and more sharp. Previously the orange part was more gentle, and then the green trend is actually where it actually moved more sharply. Okay, so the price, you notice it retraced to the uptrend support before going higher. Okay, yeah, so the green part was actually a steeper uptrend was drawn. So just now is what I meant by why we need to readjust if we are using trend lines to identify uptrend or downtrend stocks. Okay, downtrend. Okay, this is Alibaba. Okay, I think it's very familiar with a lot of us. You can see that from after we draw the two high of the stock, is form a series of lower high, lower low. Okay, lower the high keeps getting lower, and the low also keeps getting lower also. In this region. Okay, then the price will rebound to the uptrend resistance before retracing, right? If you took note of this, and it goes lower after that. Okay, here it almost hit, yeah, but it didn't. Okay, so how do you identify key entry for how do you identify key entry for stocks using moving average? Okay, so first I'm going to use Petro China as a guide. This is for long. Later Marcus will show you guys on how to identify because there could be different DLCs for the same stock. So he will share with you how to select the right stock to long, the right DLC to consider when you're taking a long or short position. Okay, yeah. So if you guys take note, right, this is the buy setup. All right, you're actually looking at the 20 EMA, 50 EMA, and 150 EMA. Okay? So whereby what you see is that you notice the 20 EMA is above the 50 EMA. This is the green line, the blue line, and both of them, both the 20 and 50 are above the 150 EMA. That means above the longer term trend. Okay, the price also need to break above the 150. Okay, why? Because okay, you can use 200 or use 150. There's no preference. Just that in this example, we use the 150. Okay, why is it so? Because it means that the stock is already above the long-term moving average. Then if that means you're more sure that it is already in an uptrend. Then you start to look for opportunity to do a long trade, right? That means you try to do it on the buy side. So what you do is you wait for the stock to retrace back to the 20 and 50 EMA level. Okay, for example, in this when it went up, then it started to retrace. Okay, I want to share with you guys one point is that why over here we wouldn't take a trade, because remember earlier I was saying preferably the moving average should be sloping upwards in an uptrend, right? Then that will be, show that the uptrend is actually having more strength, more sharper. So after it consolidate around the 50 EMA, it actually rebounded, form a retracement. Okay, and you wait for bullish candle to look for entry, which is over here. Because how can you look for bullish entry is, for example, maybe break the previous day high. That could be one way of a bullish candle setup. So over here is one in the green box. Over here also, it retraces to the 20 EMA, because in between the MA is still upward sloping, right? And then the next day it break above, then you just actually do a long trade. Over here is also over here you won't do, because it's you can see it's downward sloping already, and then here also downward sloping, and it actually break up below the 150 EMA, but it came back right above the 150 EMA again, and then retouch right at the upward sloping 20 and 50 EMA, and then you look for entry, okay, when you break the previous day candle, which is around here, this portion here, this portion also. All right, and this is also the same thing. Over here I will show you guys an example. This one actually is not really an ideal one, but it is still upward sloping, but you can see the distance between the two moving average has kind of like close up already. But I'll show you guys later what happens to it. Okay, yeah. So you can see that the buy, exit, and stop loss, right? There are actually ways to identify the take profit exit. Okay, you can look at the next horizontal resistance or take profit opportunity. For example, this was actually one area where we do a long entry, for example. Okay, you can look at this, the next swing high, the previous swing high was actually here, right? So you can actually wait for here to take profit, but preferably about 1 to 2 pips, maybe below this swing high, because sometimes it may just kiss the swing high and then it drop already. Okay, so 1 to 2 pips below, you can take profit. Or what you can do is, you will notice over this region in blue, right? The stock was consolidating in a box, like a zone, right? So when you break out, you can actually do a projection, right? So over here, this zone, you can take 50% of the profit. With the other 50% over here, it reaches a swing high, you take the rest of the profit. Okay. And over here, you can see that when it start to rebound up, right? This is a swing high, so you may want to just take your profit here. Okay, and then you start to retrace over here to here. That is your entry point, the one in green we showed earlier, right? Then you may want to actually, this is the swing high, you wait until here, 1 to 2 pips below it, you actually take your profits already, right? And it comes back to here, right? And when you start to do a long entry, This swing high, you take 50%. And if you notice again, this is like a box consolidation. It project upwards, the other 50% balance you can take. Right here, right, when you long or the swing high, you can take. But over here, you can see that when, let's say this is the entry point because it break the previous day high, the moment it reaches the stock close below the 50 EMA, right, you can actually stop loss, right, or take profit if let's say there's still profit. Yeah, because if it close below the 50 EMA means it's actually below the midterm, right, and you are trading in terms of short-term momentum. So this is something you may consider to take stop loss. So again, I'm just showing you this is because not all methods is 100%. There will be time where you may need to take stop loss if you need to, but that is needed because you must have a trade plan when you're trading. That's important. That's my point. Okay. So what's your stop loss? Your stop loss can actually be just below the recent swing low. Okay, like over here, right? This is your swing low. You just the recent swing low, or if it close below the 50 EMA, like in this point here, you actually just take your stop loss. Okay. Yep. So the next one that we're gonna identify, we're gonna show is iFast. Let's say, right? So short sell setup, basically 20 EMA below the 50 EMA, and then the 20 and 50 EMA both are below the 150. So what happened is over here, right? When it break the 150 EMA, it tried to rebound and it broke again. Then when it's trying to attempt to rebound, it was like really just jam at the 50 EMA. And you can notice the 50 and 20 are already downward sloping, right? Already downward sloping. And you can notice over here, they were like trying to break the 150 EMA also because it jammed over there, right? So what you do is, and preferably the stock is below, preferably if possible, it is below the 150 EMA also. Okay, so means because the stock is already below the long-term moving average, right? So you wait for it to rebound and you look for a bearish candle to short. So what is a bearish candle setup could be if it actually break below the previous day low. So over, let's say when you touch here, right, then it start to break down below the previous day low, you can do a short with a stop loss just slightly above here, right, the setup, or if it close above the 50 EMA, which I'm going to share with you with the chart over here. Okay, so for example, over here, let's say you were to short it, right, your take profit will be at the horizontal support, which is over here, the swing low, right? You can take 50% of it. And you notice this is like a box region. You can project it downwards to take your balance 50% if you want to. If not, you can take everything at the swing low, is fine, no problem. Okay. Or if the stock close below the 50 EMA, you also just exit. Okay. So the stop loss, right? This is another example, right? The stock actually came down, try to rally to hit the 50 EMA. Then after that, start to retrace back. You look for the candle to break the previous day low. You can actually stop execute your short, and then your stop loss should be slightly just above the recent swing high, or if it close above the 50 EMA. All right, then you take profit over here, right? The swing low, or you can actually project downwards in the box to take the 50% balance also can, right? Okay, so for how to identify key level using uptrend, okay, uptrend stocks. Okay, this is one. We're using Wilma again later. Marcus will actually show you guys how to identify some how to see what are the good DLC to use. Okay, so you can see actually minimum two low points, right? Whenever the stock hit the uptrend support, it will rebound, right? Right over here, it rebounded again. Over here, it did, but then it broke down already, right? So let's see the buy setup. Okay, look for price to retrace back to uptrend support line, right? Let's say from here is the second point. then it didn't break below the uptrend line. And over here, over this candle, it is where it broke the previous day high, right? That would be a bullish candle setup, okay? And your stop loss can be slightly just below here, for example, or you want to go even this swing low. It's also possible, right? Sorry. Okay. So how do you do a buy, exit, and stop loss? Okay, so your take profit stop loss, right? When you actually do an entry already, you look for the next resistance zone. You see the one in green here? So in the next resistance zone here, you actually can take profit. Of course, it continue to move up, but this one, you don't have a choice. Sometimes, you can't be, everything is at the top. You can't sell everything at the top and buy everything at the bottom also, okay? So if the stock, or if the stock close below the uptrend line, also just take, just exit the trade, okay? Because that means that it might be in danger that the trend is already changed. Okay, so your stop loss, right? You see the other point here, this way also, when it rebounded, let's say over here, you take the trade, and then you look for the swing high here, 1 to 2 pips below the swing high, you just take a profit already. Okay, and if you notice over here, this point, by right, this point, you may not actually take the trade because it's already below, right? But sometimes it may have a situation whereby it below for a few days and the candle can go up again and continue to go up. It's also possible. So if let's say one were to take a trade here, for example, right? This one I colored in red because it's stop loss. Then this low candle wick would be your stop loss, just slightly below here. So if you were to take a trade here, because it break above already, and take a trade over here, that will be your stop loss because it's already below this swing low. All right, yeah. So the important, because if you don't take, right, you notice it actually drop more actually. Okay, so you place your stop loss slightly below the recent swing low or the horizontal support area. Okay, and then how to identify key level using trend line. Now it's short. This is Alibaba. Okay, which I think a lot of you all will probably be keen. Okay, so Alibaba, you can take note that since October 2020, it has been on a downtrend, right? Whenever it hits this, the second one was here. Whenever it hit these trend lines, it was tend to go down more, right? So what you can do is you wait for price to rebound to the trend line. You won't be able to short here because it's just a first point, right? So this is the second point, right? What you do is after the second point, you start to retrace again, right? When you retrace, so over this red candle, when you break the previous day low, right, you can actually do a short, and your stop loss will be slightly above the swing high, right? Because above this swing high is also where the stock is above the downtrend line already. So you back then you may not know whether is it really change of trend going up again, or it is a resistance, right? So over here you place a short. So you wait for bearish candle, right? For example, if you break the previous day low, right? And over here also, this portion also, and this portion. Okay. So I'm going to share with you guys more detail about this one. Right. You can see the short sell, exit, and stop loss, right? Take profit area is, let's say you were to short it around here. This is the swing low. So at the swing low here, you can actually take some profit, but you don't try to look for if you see a support here, right? Try to 1 to 2 pips above, you take your profits already, because sometimes, as I said earlier, it hit the swing low, sometimes it keeps there only, then you start to rebound back. Then the worst part is it rebound back some more, you may lose your profit. Okay, and then the second part, when it comes to rebound, this is interesting. If you take a note here, hey, right, this is actually above the trend line. Yeah, which is true. So when it's above, we have to wait. Okay, you wait, and you see this breakdown again. It's coming back down. So let's say take a shot at the opening where it gapped down because it's already below it, right? And it's below the previous candle also. So your stop loss will be here, right? And then you see the swing low was here, right? So you took a profit, but this candle is actually, it gapped down. So the moment when it gapped down, right? Okay, when it gapped down, you actually just take your profit without don't hesitate. Just basically, even it gapped down, you just take your profit first, it to be safe. Then it actually rebounded again. There's opportunity for you to still short, you know. So after that, it also again gapped down because this, if you look at this part, right, this will be the will be the downside support, and you should gap down so you can cover here, and then rally again, right? This will be your area to take profit also, and this will be a stop loss. Okay, so what you do is, like I explained earlier, you can look at the next downside support to take profit, or if the stock close above the uptrend line, you also take your profit, or you just take your stop loss, because you may not know if the stock has changed trend, right? So your stop loss point will be, it actually, if it's above the swing high or the horizontal resistance, you need to stop loss, or if it close above the downtrend line. Okay, so next I'm going to talk about how do you do proper position sizing for risk management. Now also one more thing I will share with you all also is the thing about DLC is that you won't have problem like margin call, because the max you would risk, right, is basically the position that you put inside the DLC inside. This one later Marcus will talk more about it. Okay, but I'll just share with you all how do you do proper position sizing for risk management in trades, because this is something that it's always underappreciated by many traders, especially newbie traders. Okay, new traders, for example. Okay, so because you run, no matter what method you use, there will be time where there will be drawdown, especially the recent volatile market, as you know. Okay, so only thing that can keep you in the trading game for the long term, right, is if you have proper position sizing to manage your risk. Okay, so I hope you all can pay attention to this part and take a snapshot of the formula. Okay, so first thing is your stop loss per trade should not be more than 5% of your trading capital. 5%. All right, why 5%? Because if you want to wipe out your trading capital, means you got to be wrong 20 times, and the 5% we will not put in the commission and the charges for simplicity of calculation. Okay, so for example, right, let's say your trading capital is 10,000, so 5% of your trading capital should be $500. So you should not risk more than $500 in every trade that you do. All right, and the formula for the lot size calculation, right, is quantity of, this is very important, please take a picture or something like that. Quantity of share to trade is the amount to risk divided by entry minus stop loss, and you absolute the number. What by absolute number means, if it's a negative, if your entry price minus stop loss is negative, you ignore the negative calculation, just take the number itself. Okay, I will share with you what I mean. Example, right, you have a short entry, okay, or long entry. Both of them, the price is $1. That means at $1 you want to short, or $1 you want to buy. Okay, you want to short sell at $1 or you want to buy at $1. So stop loss for the short sell is 110. That means if the stock go to 110, okay, I will cover my short sell because I don't want to face infinite risk. Okay, if the stock hit 90 cents, if I were to buy, but the stock hit 90 cents, I would cut loss. All right, so far so clear? So far okay? So I'm willing to risk only $500 in the trade. So what should be the quantity of share I should trade? Is basically quantity of share to trade. $500 divide, if I'm shorting, $500 divide by $1 minus 110, you get negative 10 cents, right? But you ignore the negative. So you basically just 500 divide by 10 cents, you get 5,000 shares. Now you have a quantity to to trade for long, right? Basically, it's $500 divided by $1 minus 90 cents equal 5,000 share also, because 500 divided by 10 cents. Okay, yeah. So with that, I have already finished my part of the presentation, and this is my QR code. You all can maybe just take a 5 seconds to just scan it, and this is my contact number. It has my detail in there, and you know, if you have any question, just feel free to contact me after the webinar if you want to. And with that, thank you, and I'll pass the time to Marcus. Okay, Marcus, over to you, please.
Yeah, hi everyone. Hi Roy, can you hear me, right? Yeah, okay, so it's all good. So Roy, we'll also fill some Q&A later at the end of this 20-minute session. So you can stay to the end, and then we'll answer some of the Q&A after that as well, if you have any questions for Roy. By the next 20 minutes, I think we just want to very quickly go through a bit about DLCs, right? So that's what Roy has shared a bit about. So DLCs, what is it about? You know, how can you use it in such a market environment right now? And also, you know, how can you use it as part of your portfolio? So Roy has done a bit of the fundamentals, right? How do you enter a position? How do you exit a position? How do you proper risk management, etc. Right? So now we want to look at, you know, what are the DLCs and etc. So very quick introduction of myself first. So I am from Societe Generale. We are the issuer of these DLCs, daily leverage certificates. And we, so I am part of the team that does like warrants and CBBCs in Hong Kong as well. So I take care of the DLC business here in Singapore. And we launched DLCs, this is our 5th year now. We have launched DLCs on SGX for the last, in 2017. And so we are turning 5 this year in July. So this product has gained quite a bit of adoption among the investing community in Singapore. And we're very heartened and glad that, you know, PhillipCapital is also one of our strong partners. Quite a lot of Phillip clients do make use of the DLCs as part of their portfolio. So as I mentioned, the DLCs are listed and traded on SGX securities market, right? So you can gain access to them through your regular POEM stock trading account, right? Same account that you use to trade your DBS stock. You can find the DLCs on your POEM's account as well. All right, you just need to key in the stock code or even the DLC name, the start of the DLC name, and you should be able to retrieve it on your POEM's account as well. All right, so this is our DLC website. This is at dlc.socgen.com. This is our DLC website, and you can come here and find all the information you know, about DLCs as well. You can see the top gainers and losers. So you can see today the Hong Kong market did rally quite a bit. I think it's mainly on the back that, you know, people are, I mean, it's just people are betting that the tech sector clampdown is starting to ease, as well as, you know, the China reopening of its economy. So they are betting on that. And you can see quite a bit of bullish sentiment in the market today. A lot of these stocks were up 5 to 10%. You can see Sunny Long over here was up, I mean, it was up around 10%, 10 to 12%. Therefore, the DLC is up by 64% over here. All right, subsequently, also you will see that, you know, the short DLCs which declines when the underlying stock goes up, also suffered similar losses as well. All right, so let me just quickly give an intro into the DLCs. You can come to our DLC page here under education. You can find most of the information that you need over here on what is a DLC, you know, what are the different product features of the DLCs. I will not be able to touch on all today, given a short span of time. But I just want to make use of the next 15 minutes to give you a quick introduction of the DLC. So these DLCs, daily leverage certificates, it's called daily leverage certificates. The daily does not mean that you can only trade it intraday or you can only trade it for one day. All right, that's a myth, common myth. It does not mean that you only have to trade it buy and sell within a day, or, you know, can only hold it for one trading day. These DLCs are short-term trading instruments. All right, but you can use it for you can hold it for a period of like a few days or even like a few weeks. But definitely, we do not recommend that you hold the DLCs for more than a month, and definitely much less hold it for a year. Okay, these are short-term trading instruments. As part of your whole investment portfolio, you dedicate 95% of your capital to your buy and hold investment that you want to hold forever. That's investing. This 5% of capital, you can allocate it to something more tactical, right? That you can see current trends in the market, you know, current opportunities in the market in the short term, You can use these DLCs to capture these opportunities, whether it's a long direction or it's a short directions. You can use this efficient tool to enhance your returns. All right. So these DLCs are listed and traded on exchange securities market. All right. And us as the issuer, we are the issuer, but also the designated market maker, which means that we, SocGen, are there throughout the trading day to provide continuous bid and offer quotes for you to be able to buy and sell these DLCs. All right. And you can trade it on an exchange, meaning that, you can access it through your POEM securities account, the same way that you trade your DBS, OCBC, UOB stocks. And for these DLCs, there is a long and a short DLC, right? There's two types of DLC, a long and a short DLC. You buy the long DLC when you want when you believe that the underlying stock or underlying index will rise, right? If you believe that underlying stock or index will fall, will correct, then you will buy the short DLC to capitalize on that view of yours. Okay, so please do not go and short sell any DLCs. Whatever direction you choose, whether it's a long direction or short direction, you always buy the DLC. All right, you buy the long DLC if you're bullish, you buy the short DLC if you are bearish on the underlying asset. Okay, so these two types of DLC. And how does it work on a very it works in quite a linear pricing function, meaning that if the underlying stock, if DBS stock is up by 1% today, then the 5 times long DBS DLC will be up by 5%. All right. And if the underlying stock DBS is down by 1%, if it corrected by 1% today, then your long DLC will fall in value by 5%, but your short DLC will increase in value by 5%. All right. So on a close-to-close basis, every day will give you that 5 times movement of the daily performance of the underlying stock or index. All right. Okay. So that's as simple as it is in terms of how the DLCs work on a day-to-day. All right. Every day it will give you that 5 times performance of its previous close. Okay. Okay. So that's how DLCs work in a simplified way. And then you can see the DLCs, you can see the stock code over here. This is the DLC name over here, and this is the stock code. DANW is the stock code for this 10-cent long DLC. So if you go into your POEMS account, you can look for DANW. You will be able to retrieve this 10-cent long DLC. All right, and then you can see the DLC name itself. The front of the DLC name is the underlying stock, okay, or underlying index. You can see over here, this is a 10-cent DLC. Next one is the 5 times leverage over here. And then you can see whether it's a long or short DLC over here, right? If it's a short DLC, it will spell out short over here, okay? And SG stands for Societe Generale, all right? So we are the issuer of this DLC, so SG stands for SocGen. And the last part of the name, you can see there's a 6-digit over at the back. This is the expiry date in year, month, date format, all right? So this is usually, DLCs are usually issued with a long-term expiry, whether is it 1 year, 2 years, or 3 years, okay? So you just need to make sure that you don't buy a DLC that is too close to expiry. Otherwise, you can't have enough time for your DLC, for your trade to play out, all right? But most of these are long dated expiry, and it doesn't affect the performance of the DLC in terms of its expiry. Every day, it will give you that 5 times performance on a close-to-close basis, all the way up to the expiry date, okay? So don't have to worry too much about the expiry date. Just make sure you don't choose one that is too close to the current day, so they can have time for your trade to play out. All right, and I wanted to share a bit about the compounding effect before I just go into our website, to show you some of the other features of our website. The compounding effect is a very important feature of the DLC. So every day it gives you that 5 times performance, right? The DLC will move up by 5% when the underlying stock goes up by 1%. That's on a day-to-day basis, on a close-to-close basis. All right, but if you hold a DLC for more than a day for a period of time, the compounding effect will kick in. And the compounding effect can work for you or against you. All right, so you need to understand this feature very well, okay? And that's illustrated through an example over here, all right? So the compounding effect in a rising market, in the strong trending market, it can work for you, all right? If the underlying stock or underlying index, in this case, Hang Seng Index, goes up by 2%, 2%, and 2% for 3 consecutive days, then the 5 times long DLC will go up every day by times 5 of that, 10%, 10%, 10%. At the end of the 3 days, from 250, it'll go up by 33.2%. All right. So this is the ultimate, the cumulative return of the 5 times long DLC on the HSI index. So you can see over here, HSI is up by 6%, right? 6% times 5 is 30%. Where did the extra 3% come from, right? So every day your gains and losses are locked in. So you can see that this 10% on the second day is based off a higher base, and then the third day is based off a higher base as well. All right. So in the end, you get compounding effect. Your gains are compounded, and you get an extra 3% kicker gain on this DLC. All right. So you can see how this compounding effect can work for you in a strong trending market. All right. But in a volatile market, all right, this might not work for you in that sense. Okay. So you can see over here, the Hang Seng Index is down by 3% on the first day, down by 4% on the second day, and up by 9% on the third day. All right, every day it gives you that 5 times performance still, right? -3 times 5 is -15%, -4 times 5 is -20%, +9 times 5 is 45%, right? Every day it gives you that 5 times performance, the DLC. But overall, cumulative return on the DLC over the 3 days is -1.2%, right? Instead of the 1.5 times 5 is about, say 7%, right? Instead of the 7% gain, your DLC cumulative return is -1.2%. So in such a very whipsaw market, in a very volatile market, like sideways market, these DLCs, the compounding effect will not work for you in that sense, all right? It gives you less than that 5 times performance that you would expect on the DLC because of the compounding effect. Okay, so DLCs work best in a strong trending market and also in a short-term market. You know, in a long-term basis, markets might mean revert, mean reversion, or it might go sideways, but in a short term, you can have a view of whether there's a short-term trend going up or short-term trend going down, and then you can use the DLCs to capitalize on this view of yours in the short term. All right, so I will not go too much into the education part. You can have a look at our tab over here to learn more about the cost and fees, the airbag mechanism, or you can drop us a question in the Q&A if you want me to explain that in the Q&A later. But you can view more in the education tab, and there's videos for you to also have a look over here. But I wanted to first point your direction to just now. Okay, so Sunny Optical went up DLC, long DLC DBJW, the stock code DBJW, is up by 64% today. All right, let's click into it and see actually how did the Sunny Optical DLC perform, because Sunny Optical was up by 13% today. You can see today's Sunny Optical stock 2382.Hong Kong. The Hong Kong stock was up by 13% today. And you can see it was up 13%, and you can see that, the DLC is up by 64%. All right, so that's roughly 13 times 5. You can see it's roughly up. That's where the 5 times performance is, right? Okay, so it's close to 65%. This is where the 5 times performance is on a close-to-close basis on a daily basis. All right, this DLC, previous close, this is updated for today already. But I think you can make the calculation, 64%, 0.32 times 0.36. Yesterday it was at, probably, you can see over here the intrinsic close, previous close. But it was up by, hang on. Yeah, it was around 20 cents yesterday. Let me see previous close. So I can't see it here. You have to download the Excel file over here. But basically, it was up by 64% from its previous intrinsic close. All right. So every day, those people who trade DLCs, you should be aware of this intrinsic close value over here. Okay. This intrinsic close is the daily sort of mark-to-market value of the DLCs every day, which accounts for the cost and overnight costs and fees. All right. You can see that we'll publish this every day between 7 to 8 p.m. This will take into account the overnight costs and fees, and this is the value that tomorrow, if Sunny Optical is up by another 5% tomorrow, then 5 times 5, 25%, the DLC will be up by 25% from this close value here today. All right. Okay, so that's where the 5 times performance is, and you can see the daily costs and fees over here as well. So the daily costs and fees are deducted in the value of the product. Like I said, the intrinsic close will account for the costs and fees every night. You will deduct from the value of the DLC itself. Okay, so this is the daily costs and fees that is published every day as well. So this amount in dollar value was deducted from the value of the DLC every day. Okay, if you trade it for DLC for like 1 or 2 days or a few days, the value of the costs and fees is really quite negligible in terms of the overall value of your product, of your DLC. But over a period of 1 year or 6 months or to 1 year, the daily costs and fees will add up. All right, so that's another reason why the DLCs is not meant to be bought and held for a long period of time. Okay, this is meant to be a short-term trading instrument that you hold for a few days, a few weeks, but definitely not months at end. All right. Okay, so you can see this Sunny Long DLC was up by 64% today. Correspondingly, you will see that the short DLC was also down by roughly around 64% as well. If you bought a short DLC and the underlying stock goes up, then your short DLC value will decline. Okay, you can use our price matrix to see. So this is the close value for today. All right, price matrix allows you to see how does the DLC move corresponding to the underlying stock performance. All right, so this is an easy way for you to see, if tomorrow, today the Sunny Optical closed at 112.2. If tomorrow Sunny Optical goes up by 5%, as I mentioned just now, right? 118.2, it goes up to 118 Hong Kong dollars. Okay, representing a 5% gain. The DLC, which closed today at 0.32, 32 cents, will go up to 40.6 cents over here. And that represents a 26 to 27% gain on the long DLC DVJW. Okay, but correspondingly, if the underlying stock Sunny Optical drops by 5%, if tomorrow it declines by 5%, drops to $106 Hong Kong dollars, then the DLC itself will drop from 32 cents down to 23 cents. And that is a minus 26% gain. All right, so that's a 5 times movement. But this matrix allows you to see for what level does the underlying stock move and then where the DLC price will be at. Okay, then you can set your buy limit order or your sell limit orders to take profit if you want, or cut loss, to cut your losses. You can use this price matrix as a reference to see where the DLC price will be for a corresponding move in the underlying stock. Okay, so you can see this price matrix over here. And the last thing I wanted to show you is also the historical compounding tool that we have. You can see over here in the past 5 trading days, past 10 days, 1 month, 6 months, how did the DLC move if you were to hold the DLC for 5 days, 10 days, 1 month, 3 months, 6 months. All right. So in the past 5 trading days or past 4 trading days, you can see Sunny Optical gained by 17.7, so roughly around 18%, right? And 18% times 5 is about 90%, right? 18% times 5 is about 90%. But then the DVJW gained by 98%, right? So the extra 8% is the compounding effect. It's due to the compounding effect because this Sunny Optical was uptrend for a few days. It kept gaining for a few days, for 4 trading days. Therefore, it gives you the extra 8% gain on the DLC due to the compounding effect. Okay, so over the last 4 trading days, Sunny Optical was up by about 18%, while DVJW was up about 98%. Okay. All right, but like I said, the compounding effect can work for you or against you. So if you hold it for a short period of time, you're able to register that gain. But if you hold it for a period of say 6 months, wow, okay, the Sunny Optical is down by minus 12.2% in the period of 30 trading days. Okay, we're looking at just 30 trading days over here. All right, 30 trading days over here, and that times 5 is 60%. Right, so the DVGW is supposed to be down 60%, but it's down by minus 73%. That again is because of the compounding effect. Okay, so you need to be careful of the in the long-term basis, the markets will move like that, and that will have an effect on your DLC, and therefore because of the compounding effect, and therefore we don't recommend that people hold it for a long period of time. Please hold it for a few days, a few weeks, but please try not to hold it for more than a month. Okay, because the compounding effect can kick in, and you might not really get the 5 times leverage performance that you expect. Okay, so a few tools here for you to see. You can see our terms page for all the information that you need on the DLCs. And the price matrix is an important tool as well for you to see where the DLC price will move corresponding to the underlying stock. And you can also have a look at our compounding effect calculator to see, how does the over a period of time, how does the Sunny Optical move. And I wanted to go to the next part of just a very quick one about how to select the right DLC, right? So over here is a 10-cent stock, for example, right? I want to look at 10-cent stock. I look for under our products, search page, and then I go to here, and then let me just try from start again. I go to products, I go to search, okay, and then I go to here underlying and I look for 10-cent. Okay, I type 10-cent. Okay, and these are all the long and short 10-cent DLCs available. say I'm looking for a long DLC because I'm bullish on Tencent stock. So there are 3 long Tencent DLCs for you to choose from. Okay, so as a very quick guide, a shortcut for you to select the right DLC, because all 3 Tencent long DLCs over here all give that 5 times performance on the underlying stock, but they are at different prices, right? You can see one is at 78 cents, one is at 14 cents, one is at 5 cents, right? So some people have different preferences. Some people like a higher price DLC, some people like a lower price DLC. So that is up to individual preference, and we try to give investors more choices in terms of the range. Or maybe even some of the DLCs was originally issued at 50 cents, now it has risen up to $1. Some DLCs issued at 20 cents, dropped down to 1 cent. So we do issue new DLCs here and there to be able to keep an attractive shelf for people to trade the underlying stock. All right. But the best way you can choose, okay, so these 3 DLCs are long Tencent DLCs, right? How do I choose which one's the best DLC to sort of like gain my exposure to Tencent? All right, the shortest cut is to use this star indicator over here. Use this star indicator, which indicates which is the most sensitive DLC. And most sensitive meaning that, this Tencent DLC will move by 1 tick. In this case, 1 tick here is 0.005, so half a cent. For every 45 cents move on Tencent stock price over here. Okay, whereas for this Tencent long DLC DIHW, you'll move by 1 tick over here, 0.001 over here, minimum bid size of 0.001 for every 47 cents move in Tencent stock. Okay, and then for this long DLC DDLW, for every 150 Hong Kong dollar move on Tencent stock, then this DLC will move by 1 tick, 0.001. Okay, so the star indication is the most sensitive DLC, and that generally should be your preferred choice if you're a short-term trader. Okay, and generally look for DLCs that are priced between 20 cents to $2. These are more sensitive DLCs, so you can look for the star. Okay, if in doubt, look for the star indicator, and then DGGW will be your best choice in terms of gaining exposure to the Tencent stock. Okay, so you would look for DGGW, just search for this stock code under your Poems account, and you should be able to retrieve this DLC over here. Okay, again, I mentioned that all 3 DLCs will still give you that 5 times performance on a close-to-close basis every day, but due to the different minimum bid size for each of the DLCs, right? So one is at 0.001, this one is at 0.005, this one is 0.001. They can vary in terms of the sensitivity, okay, of the DLCs due to extract minimum bid size. All right, so in this case here, best choice would be DGGW over here. So you can choose this DLC to gain exposure to the Tencent long if you choose to, if you're bullish on Tencent stock. All right, and just a concluding one, I think we do have quite a large range of shelf for you to choose from. We even have US indices, NASDAQ and S&P 500 index. We do have a mini page over here for you to have a look at. You can have a look at your own time to understand a bit more about how do these US DLCs work. But we also have a lot of Hong Kong stocks, and as well as the main Singapore blue chip stocks, SIA, DBS, OCBC, we have them as well, long and short DLCs. Just now, I think Roy mentioned about Wilma, right? So Wilma, we do have long and short DLCs as well. 1 long DLC and 3 short DLCs over here for you to choose from. If in doubt, look at the star indicator as to which DLC you should choose for your target exposure. All right. So we do offer a wide breadth of Singapore and Hong Kong stocks indices, as well as some US indices as well. And in general, these DLCs, I think one very strong value proposition of the DLCs that you can use is for Hong Kong stocks, mainly because it is quite expensive to trade Hong Kong stocks itself. There's stamp duty, and also there's a minimum lot size, right? Last I checked, if you want to trade BYD, if you want to get exposure to BYD stock, the minimum investment sum is 20K Singapore dollars due to the minimum bid size, right? But you can gain exposure to BYD using the DLC. And if you're a short-term trader, all the more, you might want to put 20K in one go into a BYD. And all the more you might want to also put in, like, change your money to Hong Kong dollars to buy the BYD stock on Hong Kong exchange. All the DLCs are denominated in SGD. So you don't have to have the hassle of going to buy the, change your money to Hong Kong dollars to buy the BYD stock. And also BYD, you can use the BYD DLC to gain exposure to BYD. And minimum lot size for DLTs is the same as DBS or your Singapore stocks, 100 units. So if a BYD price at 40 cents times 100, that's $40 minimum investment sum. But of course, you want to put $40 just into the DLCs. Into this DLC, you might put a bit more, a few $100 or a few $1,000, to make the broker's commission, minimum commission worthwhile per se. Okay, but if you want, you can also use the promotion that's now that Roy mentioned, the get $200 trading credits to offset your commissions. So that's also a good thing. But you can get exposure to BYD in smaller incremental sizes. See, you already have 20K to put into BYD stock. You can break it up into a few tranches, 4 tranches of 5K each, and you can use the BYD DLCs to gain that exposure in 4 tranches. All right. But that's also if you are a short-term trader, right? If you're a short-term trader, you can use the BYD DLCs. But if you want to buy BYD, if you want to get exposure to BYD over the long term, you want to buy and hold for a few years, then definitely we recommend that you buy the BYD stock instead. Please do not use the BYD DLCs and hold it for a few years. The BYD DLCs are for short-term trading only. All right. So that's one of the value propositions of using the DLCs to gain exposure to Hong Kong stocks. Lower capital that you want to use, that you can use, lower investment sum, as well as you save on some of the transaction costs by using less capital. Don't need to save on some of the costs and fees by trading it on SGX securities market rather than trading it DLCs on SGX securities market rather than trading it on Hong Kong exchange. All right, so quite a few value propositions when you want to trade the Hong Kong stocks by using the DLCs, and we do have a wide range of Hong Kong underlyings as well for you to choose from. We even have Enta stocks. Wow. Okay, we even have oil stocks, so CNOC, long and short DLCs. All right, so just a very quick one today to give you an introduction of what DLCs are, as well as introduce you to our website over here. But the most important thing that you can take away from this whole session is, this number over here. All right. So if you have any questions at all, any feedback on the DLCs, you want a bit of a one-to-one tutorial on the DLCs, or if any questions that you find you don't know how it works, please just do give us a call on this hotline number over here, 62262828. My team and I, we are on standby during SGX market hours to answer any questions that you might have on the DLCs. We're happy to clarify any questions or doubts that you have. But if you're shy as well to speak to us, you can always write us here under contact us. You can drop us a quick email over here, and then we'll be sure to get back to you if you're on your question. All right. So most important, take down this number or come to our website, over here to be able to get the information as well as take down this number. If you have any questions at all about DLCs, please do feel free to give us a call. All right. And if not, that's all I have for this DLC part. I really do not want to overshoot the time too much, so I try to rush a bit. But at your own leisure, at your own pace, please do visit our website, dlc.societe.com. And then if you have any questions at all, please do drop us a line at 62262828. Okay. And now maybe you can do a bit of Q&A if there's any questions. Roy, you still there?
Yeah. Yes, I'm here. Okay, I see this gentleman, I think, is it Mr. Ho? Mr. Ho. Okay. He is asking, the EMA chart available in the app? Yes, it is. Basically, you go to the indicator in the app, and then you go to exponential moving average, and you can actually able to plot it out under the setting part. Yeah. So it is actually available there. It's also available on the web as well as the app also. So any other questions you guys may have?
You have any question, Roy, on DLCs? Is it clear?
Yeah, it's good. It's great. It's great. Any questions for Marcus on the DLC, guys?
Yeah, I think there is probably some questions also on the dividends, etc., corporate actions, right? I think there is one of the common questions is dividend, corporate actions, what happens to expiry? Very quickly, on the dividends wise, we do track the underlying stock on a total return basis. So your dividends are adjusted for when it comes to the day before X date, and then on X date itself, it would be as though the DLC will be trading as though the DLCs have been already accounted for in the price of the DLCs, all right? So we do check on a total return basis. You will get your dividends priced into the product. You will not be sort of paid to you separately, kind. So that's one thing that you guys can find comfort in. If not, you can also visit our FAQ page over here. FAQ page, you can find out more questions about how would the dividend impact my DLC price. Please do have a look at our FAQ page as well to see more on that. And also what happens at expiry date, right? What happens when the DLC expires, right? You can also read up more over here. But basically, I mentioned just now that DLCs will give you that 5 times performance on a close-to-close basis all the way up to expiry. Okay, so every day you will give you that 5 times performance. If the value of the DLC the day before expiry is $1, then we will cash settle that $1 per unit to you via CDP, right? So you'll receive it through CDP as though similar to how you receive your DBS dividends or your stock dividends. All right. Okay, so I think that's all we have in this short 1 hour session.
Yes. Sorry, just one thing to add also. I just have Marcus to add also. Those of you who are interested in trading DLC, right? Do remember need to take the car, the CKCAR, but it's actually very simple. If you have any question, feel free to reach out to me. I can just, or you can ask your reminders also. So yeah, so this is something just want to share with you guys. And once again, okay, don't mind, Marcus, I share my screen for a while, yeah?
Yeah, sure, go ahead.
Yeah, okay. So this is actually my contact again. So you guys can actually contact me if you guys want to know more. Yeah, because maybe a lot of you may not be aware, especially if you are new to DLC, you need to take the CKCAR in order to trade the DLC.
Yeah.
Okay.
Oh yeah, and one last thing. So this is the first of 3 series. So Roy has really started off with a bit more fundamental about entry exit points, risk management. I've also tried to give a bit of color on the DLCs, a very short introduction. But we'll be doing 2 more webinars with Philip. All right, we'll be doing 2 more webinars in the coming weeks. So with other trainers as well. So we'll go a bit more in depth into the DLCs. The trainers from Philip will share some of their trades on the DLCs. How do you actually enter and exit the DLC trade? How do they actually strategize that? And how do they pick the DLCs? So they'll share more about that as well and show you some of their trades. And we'll go a bit more in depth into the DLCs as well. So if you have further questions, after this session about the DLCs, you can call us on our hotline. But also, you can attend the next 2 webinars to be able to ask your questions or find out more about the DLCs from a bit more of a practical perspective on how do you actually trade the DLCs. All right, so you can find these events on Poem's events page, right? Roy, it's under the Poem's events page. Okay, so you can see there and you can look for the webinars on the DLC aspect.
Yeah. Okay. If that's, I think today, thanks for your time, everybody. And I really thank you, Marcus, for also taking the time to share with us today. We appreciate that. I think if any question, you feel free to contact Marcus or myself. Okay, so with that, we hope all of you have a good evening. Okay, thank you so much. Thank you. Yeah.
All right. Thanks, everyone. Thanks, Roy.
Thanks, everyone. Okay, bye. Thanks, Marcus. Thank you. Bye.